we will be discussing about the profits and gains of business and profession. Yes, this is the toughest chapter which many people feel. But I will say about my experience with this. Even before I completed salary chapter, understanding salary chapter, I completed my PGBP chapter. I don't know why it happened, but it happened with me like that. So I love this chapter and this is super easy for me, because actually it is similar to something like accounting P&L account only, which I'll tell you now. But listen, focus on these lectures and you will become confident about this chapter. This chapter is the most important chapter for me and for you also. Why? Because in exams it gives the highest amount of marks, right? Around 15 marks easily this chapter cover. If you cover indirectly, then 25-30 also this chapter will cover, right? So this chapter you should study. When you go to practice in your corporate world, if you are into taxation practice, then maximum money you will be earning, that will be through filing income tax returns of businessmen. Like if you file income tax returns of salaried class people, what you will get? 500,000 max, right? But if you file returns of or do tax audit of business class people, then you will be earning huge money, no limit to it, right? It all depends upon the size of the business. So more marks and more earnings from this chapter. So that's why you should definitely learn this chapter. So shall we start? The chapter's name is Profits and Gains of Business and Profession. Now I'll tell you why this chapter is so easy. Now you would have seen an accounting P&L account, right? Let's draw. Accounting P&L account. What we do in this accounting P&L account? On the debit side we write expenses, correct? Very good. And on the credit side we write incomes. Now this credit side incomes minus the debit side expenses, we get the net profit. Arey sir, ye to malum hai, we know this. Arey yaar, listen carefully. I will definitely make you understand about income tax using this example. Okay? So now in accounting P&L account, what we did? Credit side incomes minus debit side expenses, we got the net profit. Suppose examples expenses are more and incomes are less, then you will get loss also, right? This is what we learned from 11th class till now in accounting. Same is the case with income tax. So let's draw an income tax P&L account, right? Income tax P&L account. On the debit side we write expenses, correct? In accounting. Same way here also expenses only written, but we name it under sections by writing section 30 to section 37. So that means whatever expenses are mentioned under section 30 to 37, that we will deduct here. From which incomes? So on the incomes are mentioned on the credit side, that is section 28 and section 41. So only these two sections will talk about incomes, business incomes, and from that we will deduct section 30 to 37 expenses, and then we get the result, that is business income. Okay? Are you able to connect with? That simple it is. Whatever we discussed in accounting, somewhat same it is, but with lot of rules and regulations. So we'll be doing the same thing, but with certain conditions, with certain rules. So that we have to understand in this chapter. So I hope you are all ready. Shall we start? Now we'll try to understand the words profits and gains of business and profession. Now business is defined under section 2 clause 13. Under section 2 clause 13 business is defined. Now what it says, any trade, commerce or manufacture or adventure in the nature of or concern in the nature of trade, commerce, manufacture. Now what is trade? Buying and selling of goods. What is trade? Buying and selling of goods. What is commerce? Commerce is trade plus services. So it is not just trade like trading, buying, selling goods. No, nothing like that. It also includes services. Right? So trading plus services comes to commerce. So commerce is equal to trade plus services. Finally, what is something called as manufacture? Manufacture is converting raw material into finished goods. Converting raw materials into finished goods is called as manufacture. Now why all these things are done? Why we do trade, why we do commerce, why we do manufacture? The purpose is profit. Right? Business will be generally for profit. Okay? Right. Sometimes what happens? An adventure or concern in the nature of trade, commerce or manufacture. What we commonly know is business is a continuous activity, and absolutely right. Suppose there is a Kirana general store, he will not just open it for one day, right? He will open every day, then only we can say that he is doing business. So business is commonly a continuous activity. But sometimes one transaction with an intention to do business, that also will be considered as business. And that's why the word adventure or concern. Like example, I took a real estate project, right? 50 acres real estate project I have taken for construction. I constructed, I closed it, and that's it. Now if I have taken only one transaction, does it mean that it is not business? It is business. So that's why they said adventure or concern in the nature of trade, commerce or manufacture. Now when we listen to the word adventure, we feel like we are going for thrill ride, Wonderla, wild water, something like that we feel. Here it is not like that. Here it is a single task for profit making. That is business. So anyhow, let's recap everybody. One thing I'll tell you, PGBP is such a vast chapter. Now don't try to remember after the lectures are over. Try to remember during the lectures itself. Okay, very good. Now let's start. Hey, it is defined under section 2 clause 13, not section, clause 13. Okay, trade, commerce or manufacture or any adventure or concern in the nature of trade, commerce or manufacture. This is called as business. Now profession is nowhere discussed. No definition, nothing like that. So what is profession? Profession is acquired skill and knowledge which is used to give a specified service. Like example, you all do cost accountancy course, chartered accountancy course with lot of efforts, and then you render some services to your clients. So what is this? An acquired knowledge to give certain service. It is backed by a body of knowledge. There is something called as a membership in profession. Like CA Institute has membership, CMA Institute has membership. So are you able to? Doctors Association is there, All India Medical Council, right? Lawyers Association, Bar Counseling is there. So there is a body of knowledge. There is something called as a membership for the association, and there is lot of knowledge acquired to give certain service, and that we call it as profession. Definition is not given. It should be implied. But they gave one small part, that is section 2 clause 36. 2 clause 36. They say profession includes vocation. So generally what we discuss, profession is acquired knowledge. But profession includes vocation means what? Vocation is something called as natural talent. Many people do many things naturally without any particular training. Right? So many people are there. Like I have seen one magician by name Suhani Shah. Now you would have heard about her or not, I don't know. but she can read your brain. Now there is no association, there is no particular membership which she has to get, there is no particular knowledge which she has to particularly gain. So there is no syllabus, there is no curriculum, nothing. It is a natural talent which developed over time for her. So if it is the case, we call it as vocation. There are many born dancers, right? That is vocation. So whatever involves natural skill and talent, we call it as vocation. So according to section 2 clause 36, profession includes vocation. Clear? Now I already said to you that we have to understand the heading, profits and gains of business and profession. So business we know, profession we know, but what is profit? Profit is basically income minus expenditure. Just a few minutes back we saw in accounting, right, that income minus expenditure we get net profit. Same way in PGBP head also section 28 and 41 talks about incomes minus expenses 30 to 37, then we get something called as profit, that we call it as business income. Sometimes there is one more word which we have to understand, and that's called as gain. What is gain? Gain is not something regular. Gain is not something regular. Suppose example, I am continuously selling my direct tax courses, I am getting regular fees from students. For me it is a business. So whatever income minus expenditure will be my profit. But at times what happens, I may get some workshops on direct tax, I may get some placement training sessions where I have to give coaching on direct taxes. So it is a gain out of my regular activities. So it is incidental, not regular, such thing is called as gain. So profits and gains from business or profession. Word is clear to you? Right. Now let's start with the sectional analysis. There is something called as section 28. This is called as chargeability section. Section 28 is chargeability. Chargeability means it will list down the items which will tell that these are the incomes which will be taxed under this head. These are the list of items which will be taxed under the PGBP head. Now why there should be a chargeability section, like section 22 for house property, 28 for PGAP, 45 for capital gains, 56 for other sources? Why chargeability is required? So that incomes are put in a proper bracket or under a proper head. Like incomes are put under a salary head, or some incomes are put under house property head, and that is done through a section called as chargeability section. Okay, what it tells? First word itself covers 99% of the items, that is profits and gains of business or profession. What Reliance Industries, Tata Motors, Tata Steel are doing, Adani Ports are doing, D-Mart is doing, they are doing business, and out of that business, or even Ganesh Narvade is doing through GMC Educare, is selling direct tax courses, right? So we are into business, correct? Correct. So any income out of business or profession, that is taxed under the head PGBP. That's the first point, which covers all types of business, whether it is retail trade, whether it is wholesale trade, whether it is manufacturing, whether it is services, whether it is agency business, whether it is commission business, right? Any type of business, all are covered. It is a very wide word. Profits and gains of business and profession, everything covered in first point. But after that also, there was a need to cover certain items where there is some confusion that where it should be kept, under PGAP or capital gains or other sources. So there was a lot of doubt. To clarify, certain more list of items are given. So shall we discuss? Yes. Compensation from managing agent. Okay, compensation for managing agency. I'll tell you very simple. Suppose Chhaganlal is appointed as the PepsiCo head I don't support PepsiCo or Coca-Cola. It is harmful for health. Whether it is Diet Coke or whether it is Pepsi, absolute ban should be there. Lassi piyo must, right? Change piyo, lassi piyo. So these are good for health, right? So always try to habituate some good habits. अरे मैं example से भी इनको निकाल देता. चलो, I'll leave them from examples also. Let's understand Amul, the taste of India. Yes or no? So Amul is a business. Now we appointed, Amul company appointed one person as the Telangana head for its business operations, because they not only sell milk, but also sell curd, chocolates, ice creams and what not, many things all associated with dairy. Right? Now Telangana head is appointed. He may not be performing great, but his contract is long contract. So what they did, his performance was not satisfied, was not happy for them. So what they did, they said, sorry boss, we don't want you to work under our company. So what Amul is doing? Terminating. Like you remember Tata terminated this Cyrus Mystery. Similar to that I am giving example. I forgot that, that's why I am telling this. Okay. So when a person is terminated, sometimes what happens, companies don't terminate but modify the terms, change the terms. Right? So either they will be giving something less, right, for changing the terms, or maybe more for changing the terms. So whatever it may be, if they are managing India agency or working for an Indian company in top positions like in CEO, CFO positions, if they get any money because of the termination or modification, now it is a capital receipt to be, they don't receive it regularly, right? They receive rarely, one time. So it is a capital receipt. That's why the question arose that should it be taxed under capital gains or under PGBP? And that's why income tax specifically said it is in relation to business. So let it be taxed under business and profession head. So compensation for managing agency, right? Whether it is for Indian company, whether it is for a foreign company managing the affairs in India, whether it is in relation to a government company or government department, right? Anything is okay. But you should receive compensation either for termination or for modification of the terms of your managerial position. And then whatever you receive, let it be taxed under PGBP head. Now come to the third point. Like there are lot of associations. Confederation of Indian Industry. This is a trade association, industry association to be very frank. FICCI. What is FICCI? Federation of Indian Chambers of Commerce and Industry. Basic thing, general knowledge, you should know. So these are trade associations. Think about something called as ICAI, Institute of Chartered Accountants of India. ICAI, Institute of Cost Accountants of India. दोनों को ICAI लिखे, मैं क्या करूं? Right? So these are professional associations like Bar Council, Medical Council. These are all professional associations. So if they render services to their members and receive certain annual fees, or they conduct certain program, for that they receive certain fees, then that is taxed under the head PGBP head. Like when I receive accounts of CMA Institute, annual report of the CMA Institute, whether it is Hyderabad chapter or the India's institute, so Kolkata chapter, we see that they also prepare normal accounts, P&L accounts only, income statement, balance sheet. And when you see their income tax, they majorly show their incomes under PGBP head. Why? Because of this third point. Because any trade or professional association rendering services to its member is taxed under the head PGBP. Great. Fourth one is export incentives. Now here export incentives means you are in export import business. If somebody want to really get into export import business, super time. If you want to do business, this is super time. Never ever such wonderful time in India has come for doing business. Government is super supportive. Really, if somebody has the thoughts and plan, you can. And if it is winter season and you are supplying lot of blankets and shawls to people in London, America, nothing like that, right? Because of the heavy electricity crisis and all, they are suffering. So people are purchasing all that. That's a great opportunity for you, right? Shall we understand the next story? What I was talking about, export incentives. Like example, government is giving some cash assistance. You export, we'll give cash assistance. Or import entitlement schemes, you are transferring to somebody and for that you are getting some money. You got cash assistance from the government. You have to pay customs duty on whatever exports you did. Rarely it is, but still. Or some on imports. Like example, mostly presently Indian companies are importing plant and machinery, right? In the past, regular goods, consumables we were importing, but now only majorly plant and machinery. So on that imports, customs duty, government says we will give duty drawback. So you receive that, that is also income. Next thing, if you think duty free replenishment certificate, duty entitlement passbook scheme, right? So these are all schemes relating to export incentives and imports also. If you get any money in relation to that, you partially transfer the license, totally transfer the license, you gave it to use for some time, right? You allowed others to transport or sell something outside India through your license. So you are earning some fees out of it, right? That all is taxed under the head PGBP. Now, you are fighting cases for business community. Like there is a lawyer called as Harish Salve, the most intelligent lawyer in our country. So he fights lot of cases for India also, even our country also he fights cases in international courts. And he also fights cases for so many people in India, so many businessmen in India. So if suppose he fights a case for Mukesh Ambani and wins the case, Mukesh Ambani is so happy that Mukesh Ambani gifted Rolls Royce car to that guy. Kon? Harish Salve. He is a legend in income tax also. I did not get the opportunity to listen to him, but if I will not leave that opportunity. Harish Salve. Okay. He don't talk much. He talks very less, but when he talks, he charges premium. Crores. Nothing less than crores he talks about. So basically, if you receive a gift during your profession, during your business, like example, suppliers are so happy with your sales that they gave you certain gifts. You are a retailer and supplier is so happy that he gave certain gifts. Like father has a Kirana general store, he gets Diwali gifts or sometimes in between cash gifts also, if he sells more of the products in retail. If that happens, that is because of the exercise of business and profession, you are getting gifts. That is taxable under the head PGBP. Suppose example, you are a businessman and your marriage is there. And on your marriage, somebody gave gift. It is not taxable under PGBP because it is not because of business and profession, it is because of marriage. Okay? If you receive because of business and profession, for some accomplishment in business or profession, not because of affection, personal relations, right? Then it is taxed under PGBP. Next point. Suppose partnership firm is there. Whatever income it earns, It is taxed under PGBP, it's normal. But what about their partners? Partners receive salary. Partners receive something called as remuneration, commission, bonus, right? Where it should be taxed. Now you may say, partners are the owners of the business. Absolutely right. But suppose there are some managing partners who are the employees of the firm, so they are getting salary. Now, it is salary, no sir? Yes, it is salary. So it should be taxed under salary. Absolutely wrong. Why so? Because, I'll tell you, carefully listen. To tax any income under salary, there should be employer-employee relationship. What I said, to tax any income under salary, there should be employer-employee relationship, and partners are not employees. Partners are not employees. They are the owners of the business, and that's why they said that whatever partners receive, whether it is salary, commission, bonus, fees, interest on capital, or even share of profit, all that whatever partner earns, that is taxed under the head A. If they are receiving it from the firm, all that is taxed under the head profits and gains of business and profession. Are you clear? So how many points we did? First one was PGBP, business and profession. Second one was compensation for managing agency, that termination and modification wala. Third one, any amount received by trade or professional association. Fourth one, we discussed export incentive, duty drawback, replenishment certificates and all. Fifth one, we discussed gift. Sixth one, we discussed partnership, firm related, partners receiving salary, commission, bonus, fees, share of profit, all that taxed under the head PGBP. The firm's income is also taxed under PGBP. Partners income is also taxed under PGBP. Now the seventh one. Here many students ask me question, I will tell you. What is Keyman insurance policy? Suppose your company takes an insurance policy on your life. You may be an employee, you may be a director, you may be some brand ambassador for the company, whatever it may be the relationship, we will just be ignorant about. Then the amount received, okay, wait, I'll tell you. Company will pay insurance premium regularly, and for company it is an expenditure, right? They will claim it under section 36. We'll discuss later on. But on the maturity of the Keyman insurance policy, or maybe on the death of the person on whom the insurance policy is taken, the amount will be given, right? Lump sum amount will be given, where that amount should be taxed. The problem arises that whether it should be taxed under salary or under PGBP or capital or other sources. Salary, PGBP or other sources. This question arose. Why? Because all the three chapters have the word sum received on Keyman insurance policy. So to clarify you, I will just draw one table and make you understand. So let's write down Keyman insurance policy. All of you along with me, write down, please, come on. Let's divide it into three parts. If suppose the employee receives it, who receives it? Employee receives it. Then it is taxed under income from salary. Taxed under which head? Income from salary. Okay. Suppose if the employer receives, that means businessman, company receives it, then obviously it is their income, so it is business income, PGBP head. Okay. But sometimes other persons receive it. Like example, employee died, employee's nominee received it. So other persons we can use the word. Okay. In that case, it is taxed under IFOS, income from other sources. Sir, how can it be like that? That employee may receive, employer may receive. It all depends upon the terms and conditions of the Keyman insurance policy. Right? In the form, when the form is to be filled, who is the nominee? Who is going to receive the money? Who takes the policy? And who is the beneficiary to the policy? All that columns should be filled, right? And as the columns are filled, so the taxation will be. Like if employee receives, salary chapter. If it is employer receiving the money on maturity or death of the person on whom the policy is taken, if the company receives it, PGBP head. If any other person, not employee, not employer, then other sources it will be taxed. Are you clear with Keyman insurance policy? Yes or no? I feel yes. Shall we go to the next point, that is point number 8. Conversion of stock in trade into capital asset. Now please try to understand. This is not that easy, so easy to make you understand. Suppose example, I have a furniture store. I have a furniture store. Now I sell furniture. So for me furniture is stock in trade. I purchased few furnitures for rupees 1 lakh. For me cost of the furniture is 1 lakh. Now my market price, that means my sales price, my retail price of that furniture, because I am going to resell it, it is 1,40,000 rupees. Market price also let's assume same. Now I required that furniture for my another office, so I took all this furniture and kept it in new office. Now what I did I sell? No. So is there any business income? No. But the point is, I would have definitely recorded it as stock in my business accounts, right? So if I am shifting that furniture, that stock, to as capital asset, using it for capital purpose, then in accounting also that stock should be converted to capital asset, correct? Same way in income tax also we'll convert it to capital asset, right? No doubt till now? Yes. When we convert, we sold, in notional language I can say, we sold the furniture, right? Not to any other person, but by converting stock to capital asset we sold it. Now for me cost was 1 lakh, and when I converted it into capital asset, the market price, fair market value was 1,40,000. So 1,40,000 will become my income. From that 1 lakh will become my expenditure, and balance 40,000 will be my business income. Okay, this is how the taxation will be, right? Now I'll show 1,40,000 as the value of capital asset, and on that 1,40,000 I'll claim depreciation under section 32. Okay, clear or not clear? When it was 1 lakh, it was stock, I cannot claim depreciation on stock. But when it became capital asset, I can claim depreciation, yes or no? The answer is yes. So that 40,000 became my business profit, right? And balance on 1,40,000 totally I can claim depreciation. Clear to all of you? Yes or no? Again repeating for you, 1 lakh was my cost. When I purchased that furniture, I will be selling it at 1,40,000, but I needed for my business, so I kept it as capital asset. So in accounting also similar adjustments will be done. In income tax returns also we should show it as business income. So my income is 1,40,000, from that cost should be reduced, 40,000 is taxable income. And one more thing, on 1,40,000, because it became a capital asset, at that price I will what? I will claim depreciation. Now I feel you understood. Similarly, when I actually go to capital gains chapter, I'll teach you one thing. That suppose capital asset is converted to stock in trade, there capital gain will be arising, right? So earlier capital asset was there. Now when they converted it to stock in trade, what happened? Now capital asset is not there. So I'll consider it as capital gains. Like that, so many things are there. As of now, you remember, if stock is converted to capital asset, it is PGBP income. Capital asset is converted to stock in trade, it is capital gain income. Okay. Yo, shall we go to the next topic? Now let's try to understand the ninth point, very important point. Actually, many people get confused with this. For your convenience, I'll make it very, very easy to understand. Now listen carefully, with lot of stories I'll teach you. What I was telling you, that there is something called as specified business. What is it? Specified business. Like cold chain facility, affordable infrastructure projects, honeybee keeping, cross country pipelines for petroleum. You could have heard something like hotels with 2-star or more accommodation, hospital with 100 beds, like that. Around 15-16 items, more than 11 items are there, which I will be teaching later on in this chapter. So as of now, you understand that these are all called as specified business. So section 35 talks about 35AD, only 35AD talks about specified business. What are they? Cold chain facility, hospital with 100 beds or more, hotel with 2-star or more accommodation. Let's restrict it here. So now, when the business is specified business and you incur capital expenditure for setting up, like to set up a hotel, lot of capital expenditure is required, right? For purchasing land, lease agreements, construction, interior decoration, all that will take up lot of capital expenditure. Now under section 35AD, that is 100% allowed as deduction. Yani total 100% deduction is given. How much deduction is given? Total 100% deduction is given. Clear? So on this you cannot claim depreciation, right? Because 100% deduction is given under section 35. Yes or no? Yes, sir. Now when you got 100% deduction under section 35AD, suppose there is a fire accident, there is a tsunami, there is something called as volcano, or there is some heavy rains, something or the other happened, but that property is destroyed. Now somebody who is investing 100 plus crores or huge amount like this, do you feel that they will not do any insurance of such building? Of course they will do, right? So that's why they did the insurance also. Now, what is the sequence of thoughts? First, list of items under section 35AD specified business. Like let's take hotel with 2-star or more accommodation. We incurred lot of capital expenditure. 100% deduction is given on that capital expenditure. So no depreciation at all. Okay, only one time deduction, right? So under 35AD we gave it. Now come to the next story. The next story is that we took the insurance of that building because it's heavy cost, so we took insurance. If there is any destruction, insurance company will pay. Now destruction happened because of civil riots and disturbances, maybe because of tsunami, volcano, acid rains, whatever the reason may be. It is covered by insurance policy. And insurance company gives you compensation for that. Now, when you spent the amount on construction, you claimed deduction, correct? You claimed deduction under 35AD. When you paid insurance policy also, the premium also you claimed deduction, right? When you spent, you claimed deduction. Now, when destruction happens, now you are receiving, correct? Now, when you receive, it should be taxed. So, that's why it is taxed under point number 9. Any compensation received from insurance company on the destruction of assets specified under section 35AD. Clear? Very good. Now come to the last point, 10th point. 10th point says that you are doing certain business. Certain activity you gave it to the other and you said you will not do that. Suppose I'll tell you that certain activities, suppose Patanjali Ramdev Baba is there. He is into manufacturing so many things. Massive diversification, I can say, he is into. Right? Sometimes it works great and sometimes some products fail. No doubt. No company in the world would have dared to do so much of diversification in such a short span. It's great Ramdev Baba, great Balakrishna, they are able to do it. Okay, some success are there, some failures are there. They will rectify, they will correct. But our businessman, our Rishis are doing something wonderful. So we should always appreciate, never makes joke. There are certain jokes which you will be able to see on the memes and all, enjoy, laugh. But that respect should not go. That's what I urge all of you to understand. Now, certain part of activity, I'll tell you that Ramdev Baba is also into solar panels business. I only was shocked. Kya? Yes. So now they are making solar panels and even selling solar panels. Now they have an exclusive contract with any domestic company for manufacturing solar panels and they will be selling in the name of Patanjali. Let's assume. Now a part of the activity, the Patanjali has given it to that company. Then what will we say? That such type of agreements can be done. And if you receive any compensation in relation to that, it is taxable under the head PGBP. Right? Now Patanjali exclusive agreement that they will not give the same task to any other company. Let's assume Patanjali also sells Rasgulla. रसगुल्ला बेचते हैं यार पतंजलि वाले, तो इसलिए बोल रहा हूँ. They are selling rasgulla. Now when they are selling rasgulla, they give exclusively to a particular vendor to manufacture rasgulla, and then Patanjali will just check the quality and finally pack it in tins, boxes and supply and sell at their outlets. Now exclusive agreement. So for not supplying anything or giving this contract to anybody, Patanjali may receive exclusive fees from that vendor. If it receives like that for not carrying any particular activity, then such fees received will be taxed under the head PGBP. Now, if like I have written a book, Direct Tax Made Easy for CMA students. I published a book, Direct Tax Made Easy. For whom I wrote this book? Only for CMA students I wrote the book, Direct Tax Made Easy. Now I will tell you that when Direct Tax Made Easy book is written by me, now who should publish? So commercial publication, Taxman publications, Snow White is there, McGraw is there, Pearson is there. Chalo, I decided that commercial publications are known to me. I gave them the right to publish the book Direct Tax Made Easy. Now they said on every sale of the book, they will pay me certain commission. So if I sell the book, they sell the book, I will get certain commissions. Now I will receive commission, that's perfectly fine. मेरे को commission मिलेगा, ये बहुत बढ़िया है. Right? I'll get commission, that's wonderful. But that commission is called as royalty. So why I am getting royalty? Because I cannot share this copyright with any other person. I gave exclusively to commercial publications that you only have the right to print this book. That means they only can print this book. No others can print these books. Clear? Very good. So such type patents are there, copyrights are there, know-how is there. There are so many things. Even research papers are copyright. Some patents are done on research papers also. So what did you understand out of this whole discussion? That if I am receiving any money, it is all because of business and profession. It is taxable under the head PGBP. I receiving money will be taxed under PGBP. But example, if it is transfer of right to manufacture, that means it is single time money received for transferring the right to manufacture. One time money received for transferring the business itself. So one time money received for transferring the business or transferring the right to manufacture. In that case, the money received will be taxed under the head under the head capital gain. It is one time amount, right? So it is a capital receipt, and capital receipt is taxed under the head capital gains. But when I talk about royalty, patent, copyright, know-how, here I will not receive one time payment. I receive recurring money on the sales or on the books printed. So that is taxed under the head PGBP. Right? For not carrying any activity in relation to business, any particular activity, not total business transferred, only particular activity, that is PGBP. Particular activity transferred, right to do particular activity in business is transferred, that is PGBP. Entire business transferred for single price, it is capital gains. Recurring revenue you are getting because of patent, know-how, copyright, trademark, that is PGBP. You transfer the right to manufacture for single price, capital gains. Like this, you should be able to differentiate between the points and understand. Okay, section 28, with this we have completed. I'll tell you one more thing, that there is something called as section 29. 29 I cannot explain to you because very small section. It simply connects 28 with all other sections. It says that whatever incomes you earn under section 28, from that deductions under section 30 to 37 will be allowed to compute your business income. Like I have shown that income tax P&L account, right? That's what section 29 talks about. Okay, yes or no? Now, what are the expenditures which are allowed as deduction? Shall we study? Are you all ready? Chalo, start karte hain. So section भूल गया 30, rent, rates, taxes, repairs and insurance of building. Rent, rates, taxes, repairs and insurance of building. Section 30. 31 talks about repairs and insurance of plant and machinery and furniture. 31 talks about repairs and insurance of plant and machinery and furniture. Okay, chalo. Let me talk about, in both these sections some things are common. The building, plant and machinery, furniture should be used for the purpose of business. What I said, used for the purpose of business. If it is used for business, then only you can claim deduction under section 30 for building and 31 for plant and machinery and furniture. Okay, very good. Now let me make you understand that what are the different items. Like rent of building is there. Rent of building, simple. If you are a sole proprietor, can you claim rent from your business and you get the rent? No, right? So notional rent is not at all allowed as deduction, right? Naam ke vaste rent, no namesake rent, notional rent, not allowed. But suppose if partnership firm is paying rent to the partner. Suppose there are Chunnu, Munnu, Tunnu, 3 partners doing business in Tunnu's building. So the firm is paying rent to Tunnu. So for Tunnu, it is rental income taxed under house property chapter, and for the firm, it is an expenditure under business head under section 30. Okay, clear? Shall I go to the next thing? Repairs. Repairs is common word for plant and machinery, furniture and building. So I'll teach commonly. Is it okay for you? will save some time, right? Repairs are of two different types. One is current repairs, we also call it as revenue repairs. One is current repairs, we also call it as revenue repairs. Are bolo to mere saath. So current repairs also called as revenue repairs. That is allowed as deduction. Now whether owner incurs it or whether tenant incurs it, not an issue. Are you incurring repair expenditure and it is a current repair to maintain the existing building or plant and machinery or furniture, then it is allowed as deduction to the person who spends it. Simple. Who spends means if owner spends, owner will get deduction. If tenant spends, tenant will get the deduction. That's it. But please remember, they should be doing business to claim the deduction. Okay? Correct. Next thing. If it is capital repairs, like additional building, we have added one more floor to the same building, right? Or plant and machinery, we have increased the capacity by adding some more parts. So if we have added the capacity, we call it as capital repairs. Now what we do with capital repairs, we add it to the cost of the asset. We add that to the cost of the asset. And on that, we claim depreciation. So we add it to the cost of the asset and we claim depreciation. Suppose example, we have added one more floor of building, then whatever the WD block of the building is there, na, to that building we'll add this additional expenditure, improvement cost, like that we'll add. And we will add that and on that we'll claim depreciation. So simply remember that there are two types of repair. How many? Two types. One is current and revenue, which will just maintain the capacity. And for that we can claim deduction under section 30 for repairs of building. 31 will claim the deduction for repairs of plant and machinery and furniture. But if it is capital expenditure, then in both the cases what we'll do, add to the cost of the respective asset and claim depreciation under section 32. Clear? Rates and taxes is the third item, right? We'll not discuss about this first, but we'll go to the insurance part. Insurance is common for both, right? 30 and 31. It is allowed as deduction. That's it. If you are paying insurance premium for building, plant and machinery or furniture, it is allowed as deduction. Actually you paid it or it is due, no problem at all. It is allowed as deduction. Okay, right. What about rates and taxes? For building under section 30, rates and taxes are allowed as deduction. But there is a clause, 43B section applies. What is the condition? It should be actually paid. Suppose for building there are property tax, sewage tax, water tax, some different types of names are there in respective municipalities. So whatever tax you paid in relation to building, rates and taxes, that is allowed as deduction under section 30, but it should be actually paid, and the year in which you actually pay, you claim the deduction, right? So payment is a criteria under section 43B. Okay. What about plant and machinery and furniture? Rates and taxes? Generally there are no rates and taxes. GST is there. You cannot claim as deduction. For plant and machinery, furniture, GST is there. You cannot claim it as deduction commonly. But suppose you are paying certain customs duty, then some relief you will get, exemption you will get, right? So customs duty you are paying, you can claim it as deduction. GST is there, you can claim it as something like credit, input tax credit, something concept is there in GST, there you will study, I'll teach. Okay, so I feel with this you understood section 31 also. Wait, if suppose plant and machinery and furniture you have taken on rent, what to do about that? So it is not covered under section 31, but section 32 says, 37 says you can claim it as deduction here. Section 37 actually talks about general expenditure allowed as deduction. So rent of plant and machinery and furniture allowed as deduction under section 37, not 31. So let's recap 30 and 31 fast together. Okay. So section 30 first. So it talks about rent, repairs, rates and taxes, insurance of building. So rent, actual rent only allowed as deduction, notional not allowed. Rent paid by firm to the partner, that is allowed as deduction. Right. Then repairs, capital repairs added to the cost of asset, 32 section, depreciation claimed. Current repairs, revenue repairs allowed as deduction for the building. Rates and taxes, if actually paid, then only allowed. In that year when payment is done, it is allowed, otherwise not allowed. Insurance, it is due or paid, then allowed as deduction under section 30 for building. Now 31, let's come to repairs and insurance. Repairs, again same, current revenue repairs of plant and machinery and furniture allowed as deduction. But if it is capital repairs added to the cost of the asset and depreciation under section 32 is claimed. And finally insurance, whether it is due or paid, it is allowed as deduction, no problem. Rent of plant and machinery and furniture is also allowed, but not under 31 but under section 37. And finally, if you have done some frames are there for your plant and machinery, and you are replacing that frames only to increase the capacity of that plant and machinery, then it is not such a big change that you can add to the cost of the asset and claim depreciation under 32. You cannot even say that it is repairs and claim it under section 37. So if such type of replacement of frames of plant and machinery to increase capacity is there, neither you can claim under 31 nor under 32. So what to do? Don't worry, section 37 general expenses, as that you can claim the deduction. I hope you enjoyed, understood all the things which I shared with you. In the next lectures, we'll start section 38.